Good afternoon, everybody. How's it going? It is 4:13 p.m. Mountain Time on Friday, October 15th, and there is one big piece of news to talk about today. Normally, I have 3 or 4 articles. We're only going to talk about one. That, I'm sure you can guess, is the approval of the Bitcoin ETF. So we're going to talk about that. We're going to look at Bitcoin and see the price action, and we're going to talk about what this means for alts. Because it is a big deal for alts, even though alts haven't really moved. We've seen a few pops. Matic had a 20% pop. Polkadot's been cruising along on its own news, but we're gonna talk about what that means for alts. Also, speaking of alts, we're gonna look at Bitcoin dominance. Had a lot of people ask me about Bitcoin dominance, what I look at in there and what it tells us. It's gonna be very simple, very quick. That's how I look at it. Every time I look at it, it's simple and quick. We're also going to go over DeFi, a little bit of DeFi, because definitely been talking about DeFi a lot. Definitely growing. So we're going to get into a few DeFi projects that I really like and I've talked about before. Going to talk about staking, the pros and cons of that. I've had some questions on that. So if you like that, please hit the like button. Please hit the subscribe button. I would appreciate it greatly. Everybody's been super kind to me. Really appreciate the feedback and the likes and the subscriptions. So I'm going to keep trying my best to put out good content for you that's helpful for you in your investing and trading. So lastly, as always, got to remember that none of this is considered financial advice. Do your own research, and everything in this video is considered for informational and educational purposes only. I am not a financial advisor. I am just a trader, but I do have my opinions and I do want to share those with you. So let's get into it. First off, here we are. Division of Corporate Finance. This is to certify that on October 15th, 2021, the NASDAQ stock market, the exchange, received from Valkyrie ETF Trust 2, the registrant, a copy of the registrant's application on Form 8-A12B for the registration of the following securities: shares of beneficial interest of Valkyrie Bitcoin Strategy ETF. We further certify that the securities described above have been approved by the exchange for listing and registration upon official notice of issuance. We understand that the registrant is seeking immediate acceleration of the effective date of registration, and we hereby join in such request. So, there you have it. SEC approves Bitcoin ETF, opening crypto to wider investor base. ProShares is set to launch trading of its Bitcoin futures ETF next week. So, big news. So let's look at the price of Bitcoin. Bitcoin currently sitting at $61,360, and a lot of volume today. Big move over the last couple weeks, last 2 or 3 weeks. Definitely today, big pop coming up near the all-time high. Can't see why this wouldn't reach the all-time high. There's really not much in the way of selling, and there's really not much leverage in the market to shake out. There's really not that many shorts either. Look at this, is the shorts on Bitfinex, usually a good gauge when the market's going to drop. So looking really good. I can't see why we wouldn't retest the previous all-time high. Would seem very likely to me. I'll have to start reevaluating my resistance levels. But one thing we could definitely do is go back to these levels and just see that the sky is the limit. So we could, I'm not saying it's going to do this. I'm just saying if you're going to create any type of wide channel or top or anything like that, that there's really a lot of room. Here's the resistance level for the previous all-time high. There's a lot of room to move to the upside. Could it drop? Sure, absolutely. When your neighbor starts asking you, is it too late to get into Bitcoin? Start thinking about selling. That's usually my indicator. When people started posting about Dogecoin on my Facebook, I saw it on my Facebook feed, people who've never ever posted anything financial in their life or anything like that, it's like, that's when it's time to get out. So we're not there yet, but things are looking really good. So let's move on to Bitcoin dominance. So what does Bitcoin dominance measure? Bitcoin dominance measures the percentage of the overall market of crypto that Bitcoin occupies. So right now, of the total market cap, right? So if we went to total one, oh, it would be an index, I'm sorry. total. So total crypto market cap. So right now, all the cryptocurrencies combined and Bitcoin, almost $2.5 trillion market cap. So of this, right, Bitcoin makes up 46.35% of that. And as you can see right now, we're just starting to pierce the 200-day moving average, simple moving average, and Bitcoin dominance. So Bitcoin dominance is looking strong. I'd almost be willing to bet, that we'll start to see some significant resistance around the 49 area. We got a few spots where, we ran into resistance there and got rejected. So around the 49 areas where I'm expecting, and that is what can possibly produce another big altcoin season. So why do I think that? So historically, when Bitcoin dominance drops, first of all, there's a few reasons why Bitcoin dominance would drop. So Bitcoin dominance would drop if Bitcoin went up at a rate slower than the rest of the market combined, or if Bitcoin stayed still and the rest of the market, or altcoins are just coins alternative to Bitcoin, and altcoins went up, or if Bitcoin went down, but all the rest of the market didn't go down at the same rate or faster. So what it generally shows is the strength of Bitcoin compared to the rest of the market and the strength of the rest of the market compared to Bitcoin. So you could see this was, this run in quarter two, end of quarter one, and beginning of quarter two, where altcoins just went off. So altcoins went off, huge gains on altcoins. So Bitcoin, lost dominance of the market, dropped all the way down below 40%. And we kind of double bottomed here in September. But, that's it. That's all. If I see Bitcoin dominance rising, I know that Bitcoin is either going down and altcoins are going down faster, or Bitcoin is going up significantly and altcoins or the other 12,000 or what cryptocurrencies aren't going up as fast as the rate of just Bitcoin. So it measures the past, but it's just a good gauge on where the strength is in the market. And right now it's in Bitcoin. So, and you can see that Bitcoin dominance is going up, strength is in Bitcoin. Bitcoin dominance is going down, strength is in altcoins. So, and you can show more strength in Bitcoin when the entire market is going down, but Bitcoin isn't going down as much as the rest of the market. So you always got to watch. Is Bitcoin going up? Is Bitcoin going down? Is Bitcoin dominance going up? Is Bitcoin dominance going down? So hopefully that helps. Right now, there's no reason to stop Bitcoin. I think we're still going to alternate a little bit. I think this weekend we'll probably see some alts take off. We've seen some really start to show some movement off of not even necessarily bottoms, just further movement after pullbacks. So I really think we're going to continue to do that until, I don't know, there's predictions that I've seen from some really reputable sources that think, 82,000 before any pullback, so 82,000 then pull back to like 64, 65,000. I don't know. I'm not going to try and guess that. I'm just going to stick to my charts. When we get here, I think that altcoins will probably show a significant run. And until there, I think like Bitcoin will inch up while altcoins inch up not quite as fast. But October, definitely showing the Uptober in it. So yeah, hopefully that helped with Bitcoin dominance. It's a measurement of the past, so it's really hard to use to predict the future, but same things as, regular charts. Look, like Bitcoin dominance broke out here, so we knew that like altcoins, not necessarily were going to go down, but that Bitcoin was going to start going up faster than the rate of altcoins, or it was going to drop slower than the rate of altcoins. So that's what I use Bitcoin dominance for. Historically, it's been a good measurement of the market. A lot of people say that it's like outdated because you have so many coins launching now, but even so, regardless, there's like 12,500 coins now, which is a little ridiculous. A lot of them are just not even, there's no volume traded on them at all. So a little ridiculous, but the more coins, there's still got to be new money into those coins to add to the total dollar amount that's in everything minus Bitcoin. So I still think it's a good gauge to go by. It hasn't, it's been a good indicator for me so far. So just wanted to spend a little bit more time explaining that. It's not like, if this does this is what's going to happen, because there's never any 100% certainty in the market. But it's a good measurement of the past, and it's a good gauge to see where the strength lies, whether it's in Bitcoin or whether it's in altcoins. And you could see that whether the market's going down or the market's going up. So hopefully that helps. I'm going to move on. We do like to look at that every time. I'm going to look at the Bitcoin futures chart just as a reminder to pay attention where we close today. So where we open on Sunday night, Sunday evening, which I think is 8 p.m. or 7 p.m. after the time change happened, 7 p.m. Eastern Standard Time. Just always watching for gaps over the weekend. There's like a saying in crypto, don't trust a weekend rally, right? And this is why. Gaps, they're really nothing. They're just, spaces on a chart where the candles don't connect. It's a gap. But they are kind of self-fulfilling prophecies that they usually fill. I say usually because they don't always fill, but most of the time they do fill the gap. So if we rise, it's going to fall. If we drop, it's going to rise. So we have filled the gap that was here back from, what is that? April 16th. So been watching this for a while, and we finally filled a little tiny gap here. So that's good to see. A lot of times they're a reversal pattern, but Bitcoin's so strong right now, I don't see it reversing. I could see a little pullback here and there, especially after the run that we just took. It wouldn't be unhealthy to see that. So moving on to altcoins, okay? I wanted to get into the altcoin market cap. We're back up to 1.3 trillion, over 1.3 trillion. It looks like, once Bitcoin slows down and we level out and we flatten out on Bitcoin, that's when alts will run. So that could happen. We'll see some resistance at the 64,000 or slightly above mark, or right here where we're at, because people are trying to, beat people to the punch to sell before a pullback maybe. Not that there will be one. We could see a flat Bitcoin over the weekend, and that would really allow an opportunity for alts to run. People will take a little bit of profit from their Bitcoin gains and throw them into altcoins. So that's what I'd watch for over the weekend. Moving on to Ethereum. Historically, Ethereum has been the mover after Bitcoin moves, right? So we're expecting Ethereum, I am at least, to test that like 39. What did I say earlier? 39.25 area of resistance, which we're almost there already. We almost reached it. And then after that would be on to test all-time highs. So I don't see why we wouldn't come up close to there if Bitcoin did. And if Ethereum is going to follow suit like it normally does, it'll be the next one to move, the first one to move over the weekend. And then it'll trickle down kind of to larger cap altcoins and then down to small cap altcoins. Not to say that small caps can't move whenever they want. If there's news, there's going to be something. But you could see, Ethereum, multiple breakouts here. And now we've broken out past the pivot point above 36.75.92. Or if you go by this pivot point here, 36.70. So pretty much the same spot. But looking really strong. Good volume, not great volume, but good, not, out of the ordinary volume, but still good volume. So looking really strong, moving upward, looking, really strong. So, okay, on to a few alts that I want to talk about that are all part of my portfolio. One of them I added today, and really just going to go over DeFi today. So DeFi. So people have asked me about staking. So staking, if you're talking about staking, this is the part that you want to get into. So you don't have to know every single part about it. You have to know a few things about it. So there's a really good article on Coinbase. So you can go to Coinbase, learn crypto basics, and just go to what is staking. I thought this was really appropriate. If a cryptocurrency you own allows staking, Current options on Coinbase include Tezos, Cosmos, and now Ethereum. This usually happens. You can stake some of your holdings and earn a percentage rate reward over time. This usually happens via a staking pool, which you can think of as being similar to an interest-bearing savings account. So that's what I want you to take home from this, is that when you stake, you get interest, and you get it usually in the form of that coin. So say if you have Ethereum and you're staking it, you're going to earn interest in the form of Ethereum. All right? The reason your crypto earns rewards while staked is because the blockchain puts it to work. I'll just read through this first before I explain. Cryptocurrencies that allow staking use a consensus mechanism called proof of stake. You've heard me mention this before. Bitcoin uses proof of work, and we'll get into that in a little bit as well, which is the way they ensure that all transactions are verified and secured without a bank or payment processor in the middle. Your crypto, if you choose to stake it, becomes part of that process. So when Bitcoin gets mined, right, it's on what's called proof of work. So you have hardware mining equipment, and I'm not going to get into hardware mining right now because, I'll probably be talking for 10, 15 minutes. But so in order to extract more Bitcoin into the market, it's in the form of rewards, right? So these hardware miners are solving a complex algorithm, which then gets converted by a transaction hash, and you have a number called the nonce, N-O-N-C-E. If that is lower, basically it's just a random number transaction hash, and it's all random. If it ends up being lower than the nonce, then you win that block and you get the block rewards. And the block rewards are what the miners get in the form of Bitcoin for securing the network. So securing the network is validating transactions or confirming transactions and mining actual Bitcoin. So you get block rewards for that. And there's 21 million, right? Based on the code, there's around 21 million available. So once that's used up, it's all gone. So that's proof of work. Proof of stake, you stake, you earn interest, and that interest is from the remaining pool of coins that are available, and that's your block reward. So you are essentially a miner when you're staking, just in a different code. You're a miner in proof of stake as opposed to proof of work. So when you hear proof of stake, you know that there's more supply being added to the market, and that's how you earn rewards. Okay. So here's where they kind of explain that as well. Why do only some cryptocurrencies have staking? This is where it starts to get more technical. Bitcoin, for instance, doesn't allow staking. To understand why, you need to allow a little bit about the background. So like what I just talked about, cryptocurrencies are typically decentralized, meaning there is no authority running the show. So how do all the computers in a decentralized network arrive at the correct answer without having it fed to them by the central authority like a bank or a credit card company? They use a consensus mechanism. Okay, the main thing that you need to understand is that you're securing the network by cooperating in proof of work or proof of stake. You are securing the network. So, not getting too technical into it, it allows for a set of rules and a set of rewards to be upheld without needing an outside source or an intermediary or a third party like a bank does. So it's trustless. You don't need to trust anything because essentially if you do anything that breaks the rules, you lose money, right? If you break the rules in mining, you lose the money that you spent in energy and you don't receive block rewards. If you break the rules, you can't really break the rules in proof of stake because the creator of the smart contracts that have the code in there for the staking are the ones who create the rules. So anyways, that's what's staking. So essentially, in a nutshell, you're providing liquidity to exchanges. So you're locking up your supply of coins, if that's allowed, in the amount that you want to, and there's usually a time frame until you're able to get those back. Those are used in exchanges, and you get a percentage of the transaction fees, right, in the form of that cryptocurrency. So there are some pros and cons to staking. So Coinbase says staking often requires a lockup or vesting period where your crypto can't be transferred for a certain period of time. This can be a drawback as you won't be able to trade stake tokens during this period, even if prices shift. Before staking, it is important to research the specific staking requirements and rules for each project you are looking to get involved with. Okay, so that's the one major downfall, is that you're locking it up for a period of time. And some are not, you could take it out whenever. Some are 30 days, some are 60 days, some are 90. For example, there's options for Polkadot that are 30 days, 60 days, I think 90 days as well. And some offer a variety as well. I want to actually look at Illuvium now that I'm doing this, because Illuvium is one of those that ends up being a little riskier. So you stake Illuvium and you can choose, so you do your core. I'm not going to connect the wallet right now, but you can stake your Illuvium for a wide period of time frames, up to 12 months, right? And the longer you lock it up for, the higher the percentage you earn. Now, on top of that, when you claim your rewards, you won't get that into your wallet for another 12 months. It does automatically compound, though, on top of that. So you may not have your staking rewards for 24 months. Who knows what can happen in the market in that time frame, right? So that is a major, could be a major con. Not a con as in like a con, but like pros and cons. This is going to be one of the negatives, one of the risks is that you're locked up. Now, the other thing is, let's say you're in Polkadot and, Polkadot went to like $49 back in Q2, right? And you lock up for 90 days. Well, it went all the way back down to like $11 or $12. And if you were locked up in that staking period, you can't do anything about it. So that's the risk there. Now, the pros for it are that you're earning interest on your coin, on your cryptocurrency that you do decide to lock up. So that is a definite benefit. I mean, you put cash in the bank and you get like 0.3%, which is terrible, absolutely terrible, where I've seen some staking as high as 80%, and I'll talk about the risks in that as well. So, it essentially, think about how much that would have to go down for you to drop below break even in the course of a year. So there's a lot of pros, there's a lot of cons to staking. Now, with the higher percentage yields, like, you might get, I think some places as high as like 8% on Bitcoin at times. Well, that's good, right? But there's also, like I said, 80%, and that is great. But what does that mean? Well, if we're staking and we're essentially miners, that means that the 80% that you get back adds to the total supply. So it's diluting the total supply of the cryptocurrency that you own and are staking. So essentially, you have to make more in your staking rewards than the price of than the drop in the price of the cryptocurrency. And the more likely it is to do so, because it is increasing the supply. It's almost like a reverse split slowly over time. You see that a lot with penny stocks where it'd almost be like, it wouldn't be anything like a reverse split or a split, because you're not allocated your ownership of your assets in different amounts. So disregard that. But think of it a little bit that way, is that, the supply is just increasing. And when you go to like CoinGecko or CoinMarketCap probably does a better job of this, keeping up with the numbers. Like, let's just go to Bitcoin, right? So we go to Bitcoin and we see, where are the additional stats? Max supply 21 million, total supply 18.844 million. So as you can see, we only have like, what is that, 2.156-ish to go. So definitely not a lot of the way to go. But if you see the max supply and total supply, you know that it can't be diluted any further if they line up the same. Anyways, moving on, right? I wanted to get into DeFi, some DeFi coins a little bit, because we are talking about DeFi when we're talking about staking. The first one, right, that I want to talk about is DeFi Click. Now, DeFi Click is relatively new. They haven't done much, but this is also something that can be beneficial to decreasing the supply. Is what's called a supply burn or a token burn. So DeFi Click, they've already burned 10%. They're doing 10% a month for 4 months, total of 40% through December. You could look at their supply. You could see the 91, how much is it that they're burning? 99 million has already been burned. So now their total supply is 891 million. This will go down to 792 and then 693. And then finally it'll wind up at 594. So decreasing the supply should increase the price. Like, they also offer staking. And what I always look at with DeFi projects is total value locked. Right now they have 5.674 million total value locked, which isn't a lot. Right now their market cap is only 3.3 million. And I'm using these numbers and I'm going over this because I'm going to show you something in the token that I'm in that I like, as the last one, I believe second to last one. Anyways, so DeFi Click, I only have the chart of the wrapped ether chart, so not a very good chart to go by, but do have, kind of a chart down here. You can see that we've had a couple spikes in volume recently. The next token burn, I wanted to bring this up because it's Friday. The next token burn is Sunday. So we should see, some significant action. At least last token burn sold off, so people probably used it as an opportunity to take some profits, and then it did come back down, so maybe they bought back in. But we can see two rising volume spikes, very nice looking, very low market cap, very risky. So with caution, don't go throw your whole portfolio in there. If you do decide to get in, you just want to keep it simple, keep it small. Next, I do want to talk about Polygon. Polygon took a nice jump today. Definitely like Polygon. The chart looks good. Had some nice movement today. 20%, about 20% up today. Is that what it was? Yeah, 20%. Not really pulling back. Had some high volume on those candles. Not really pulling back. And this is one that I've been waiting on for quite a long time. It's just been kind of frustrating, actually. But I could see this, going back and testing highs around 250 and the recent all-time high. The all-time high of 270. But we got a lot of work to do before that. But looking really strong. I think DeFi is catching on, especially as you've seen me talk about before with China. Bitcoin got banned. They went to DeFi because can't track who they are. And if they try to, then they just use a VPN to hide who they are. So moving on, this is the one I was talking about, Sunny Aggregator. This is on Solana. Solana was very, very fast-growing ecosystem, like Sunny for a few reasons. Rari governance token, I'm not going to really talk about except for the market cap. Their market cap is $406 million, and they have just about $1 billion total locked, whereas Sunny Aggregator has 1.5 billion total value locked, and their market cap is only 10 million. So 44 times above Sunny Aggregators is Rari, and they have less total value locked. So really like this. Think it's super undervalued. It has been moving really nice for me. Got in around just above 3 cents, 3.06 cents. It dropped down to like 24. This is a definite bottoming pattern for me. You see the volume picking up, coming off the bottom, flattening out, moving up a little bit. Bottoming patterns like this can be kind of frustrating because they'll move up and then they'll drop down, and it'll be like a really volatile bottoming. Lastly, I want to talk about Mirror Protocol. Really like Mirror. It's having really good volume today. It is on the verge of a breakout, and probably move that up a little bit more. You can see previous breakouts have sold off, but it is on the largest DeFi ecosystem, which is Terra, or at least it was. I can't remember if it still is. Terra is the number 11 market cap overall. You can see Mirror on there, and just like the chart, it has come down, and it was much higher. and we're just looking for a breakout here. And previous all-time high is up in the 12 area. A lot of room for opportunity. We'll see how it goes. And we'll watch that breakout line. Other than that, hope you got something from this video. I did want to mention some altcoins, especially in the DeFi space. So hopefully that was good for you. I did want to mention the Bitcoin dominance chart and how I use that, what it is meant to look at. Wanted to mention staking, get into that a little bit and tell the pros and cons. Really, like I said, the pros and cons. The pros are that you receive interest on your asset. The cons are that there is a lockup period and at high staking rewards, it could really dilute the supply. So at your own risk, but I like it. I definitely stake everything that I can. Like if it's available for the coin, why wouldn't you? But yeah, I do have a video on staking and DeFi yield farming that I did back in the day, especially when Polygon just came out with their platform, their bridge, and there was a lot of scams, a lot of high, 1,500% annual returns, and they just get smaller as more and more total value is locked, but it makes it really hard to keep the price up. But if the price can stay up and there's enough interest, or if the interest you gain is more than the loss you take in the price drop, then you're winning, and that's the yield farming game. So anyways, moving on, just wanted to talk about those things, talk about Bitcoin and the big news for the SEC approval of the ETF, the futures ETF. And we could see it reflected definitely in Bitcoin's price. We're still hanging out around the 61.4, 61.3 area, so not much selling happening. And then, of course, wanted to talk about some DeFi coins. So hopefully you got some good information out of there. Maybe a few coins that might interest you. I'll be back again on Monday. Hopefully we'll be more around 64,000 and we won't, and that would create a gap. Hopefully we're right where we're at. I like to stay right where we're at with Bitcoin over the weekend because I don't like to create gaps and create those high volatility days or nights. But anyways, that's the cryptocurrency market. So hopefully you got something from this. If you did, please hit the like, please hit the subscribe, button. I appreciate it greatly. Other than that, we'll catch you next time. Have a great day. Bye.